The price of gold surged past its record high to almost $2,200 per ounce last week. The increase came in the wake of the Federal Reserve's dovish stance on interest rates despite hotter-than-expected inflation reports. Spot gold has risen by 0.4% to reach $2,172 per ounce, while U.S. gold futures climbed 0.6% to hit $2,173 per ounce. As gold prices appreciate, the US dollar depreciated by 0.1% against its rivals, making gold more affordable for holders of other currencies and contributing to the rise in gold prices. 74% of marketers believe that there won't a rate cut until June, so they are holding on to gold, keeping its value sky high. Let's bring in Bas Kooijman, who is an asset manager at DHF Capital, and he joins us now live from Dubai. Thank you very much for being with us today.
Thank you much for having me.
So we've mentioned the Fed's dovish press conference. How is this impacting oil prices, and can you help us understand the relation between the two?
Yeah, so I see a lot of activity between the gold markets in the last couple of weeks. It's actually been very volatile. One of those moments was last Friday on the 20th of March when we saw the speech making a very big difference into the gold market, surging from 2150 all the way to 2200 and even through it on the ETF market. There's a lot of correlation towards gold, towards the dollar, towards oil, and you basically see that the whole market has corrected itself in the last couple of days, and we see actually that Friday the market was back on 2150. A good correction because those speeches are pretty predictable, that we already know that there is going to be one. The market reacts very actively, but after that it also corrects mostly towards the beginning of a speech like this.
Interesting, and I think it's safe to say that gold prices have for decades been going up, and I wonder, what's your prediction in terms of the trajectory of gold? Will they just keep going up, and how safe is the investment in the long run?
Yeah, gold always has been a safe haven for investors. We actually also advise at DHF for investors always to have a partial of their net worth in gold, for example 5%. Preferably physical gold. It's an interesting safe haven for a lot of investors due to that long-term surge of raising prices due to its limited capacity. So basically we do see that gold will surge over the long run. It will also depend on the rate cuts this year, the interest prices, but in generally we expect that the gold market can end up anywhere between 2,300, maybe even 2,500 over a couple of years. So it's a very interesting passive investment that people should consider as part of their portfolio, next to maybe a more active trading instruments.
One last point, what about other safe havens such as the Swiss franc, or some would say even crypto potentially serving as a potential safe haven? What do you think?
Yeah, it's also the mix. We can trade gold dollar, but we can also trade gold euro. You can trade gold against different other currencies. And currencies itself, or just cash value, is a safe haven in moments when you maybe expect the stock market, for example, to make a downturn. It's very good to have cash at hand to be able to grasp opportunities. So I think it's always important to have a certain percentage of cash at hand in a safe currency that you feel. So people in Switzerland will definitely go for the Swiss franc, while maybe someone in UK likes to have their reserves in cash in the local British pound for them.